Hey, everybody, welcome back. It's Mark Yegge here for another weekly update in the stock market. I hope you had a fantastic week. It's been an interesting week. Everything seems to be going up during this earnings season, even when the stocks are kind of down. Well, not everything, but I could tell you that last night we had Amazon, Apple, and Google, Alphabet, report numbers. And they didn't do that well, right? But Apple is up crazy today. It's up like 4% today or something like that. Amazon's not down as much as it was, maybe last night. And, things are kind of good. I made the call on January 9th that we are going into a bull market and that we went green. And I think that I've been saying that we're kind of reaching the end of a bear market for a while. It lasted 13 months, which is right between that 12 to 18 months that I said last year. That we were going into a bear market, and now we're kind of in the bottom of it. Now, who knows? I don't know. I'm not going to profess to be Kramer and think I know anything. All I know is that the trends are moving up, and I'm going to show you some interesting charts in a second, so that maybe you can agree with me or see what I'm talking about. You know what I'm saying? We just had a great meeting in my mastermind group, but I want to show you what we talked about. First of all, we're in a green market. We have 4 green lights on my system, so we are rocking and rolling. In this system, you can see the green arrow and the little green button there on the left that shows that we went green on the 9th of January. So things have been good since then. It's almost a month, and the stock market is moving up quite a bit. So, but I pulled up the NASDAQ, and I think this is an interesting chart. Now, I may be more of a geek than you are when it comes to the stock market, but I think this is really interesting. So I notice here that the stock market in 2020, at the beginning of the pandemic, was down to 66.31 on the NASDAQ. And then it shot all the way up to 16,212 on the NASDAQ, right? And so as it shot up, that's a 10,000 point move, right? And then it dropped down last year to 10,088. Well, interestingly enough, that's a perfect 618 Fibonacci retracement. Like, that blows my mind. And if you don't know about Fibonacci's, they're really neat. But the quick thing is, Fibonacci's are this: you take 1 and 2, the first 2 numbers in the numbers, right? 1 and 2, and that makes 3. Then you take the next 2 numbers and you add them together. 3 and 2 makes 5. 5 and 3 makes 8. 8 and 5 makes 13. 13 and 8 makes 21, and so on. And then as that grows, if you divide one number by the prior number, you get a 0.618 number, right? Or a 0.382 if you flip them around, or you can subtract them from 100 and that's the number you get. It's just amazing. So anyway, this is like a weird ratio that keeps happening in nature, human nature, and on charts. And I find that amazing. The other thing I find amazing, you'll see the red line there. Notice that the market has kind of come from 16,212 and perfectly touched those 3 swing points until the last 2 weeks. And now notice how the last 2 weeks intersects the 200-day moving average. And so now we've got a 200-day moving average with symmetry and confluence. We have the markets moving up above that line, above the 200-day moving average. A lot of good stuff is happening here. So I find that really interesting. Maybe you find it interesting too. And it's also doing it on pretty good volume. So to me, I don't know if we're going to be able to sustain this rally. Everybody says, oh, it's a bear market rally, all that stuff. We're having a recession. I don't see that. I think we might have a recession, but I don't think the market's going to feel the recession. I think they've already felt the recession. So this is the NASDAQ on a daily. You can see the chart's looking really good in the last 5 days. Popped above the 200-day moving average, gapped up with some energy. Probably going to go back and test that gap, but it looks really good. This is the weekly on the S&P 500. It looks similar. Look at that breakout. It's got a golden cross happening today. And when the golden cross happens, those trends tend to stay in place for a long time. So you can see why I'm a bit bullish. The Dow Jones Industrial Average has been strong for a while. It had a golden cross like a month, 2 months ago, looking really good. It's not performing as well as the other averages right now, but it already did for like 2 months, waiting for the other averages to kind of show up. And now they are. Same thing with the New York Stock Exchange Composite Index. You can see how that's doing. And here's how noisy it is, but how nicely it's performing on the New York. The volatility is down. You can see it's way down. When volatility is down, people aren't as scared. They get in the market, drive the market up. And I want to talk about two stocks. Apple had its numbers yesterday. It gapped up above the 200-day moving average. And then today, it's up with lots of strength and lots of volume, following on their move on numbers, which should have been down based on what they reported, but now it's up today. So we'll see if that holds true. But this one is really interesting. So here's a stock that went from 400 to 100, right? It lost 75% of its value. It did a lot of that in the last 2 months of last year. And now it's gone from 101.81 almost to 200, hit 199 today. That's about a 98% increase in 3 weeks. Like, I find that amazing. But if you've been listening to me at all, you know that I put out a couple of videos on Tesla, and I told you all the reasons that I think it's doing well and it's going to do well. And I did that while everybody was telling me that it's going to go to zero, right? So you got to listen to your gut sometimes. You got to realize that there's a fundamental story and there's a technical story. And sometimes those stories don't match. So anyway, listen, enough about that. There's more important things than money, but I hope you're making some, and I hope you have a fantastic weekend. Thanks for checking in on the weekly market update, and hope to see you next week, and wish you a super weekend. Take care. Bye.